Hello everyone, welcome to Just Invest Today and welcome back, man. Today we are talking about Alibaba, man. Alibaba earnings is just about to come up. What to expect, what to think about the market, and how they are viewing the Chinese market, because honestly there is a lot happening in the market right now and we're gonna get into it. I don't know if I should have high expectations for Alibaba during this environment because we already know what's happening, especially with the zero COVID policy that China has kind of maintained over like the last 2, 3, 4 months. So come on, like what can we really say about Alibaba? Do we really expect Alibaba earnings to be some killer, amazing, monumental thing? Because man, Alibaba has been suffering for a long damn time. If you're an Alibaba shareholder, you've been down forever. Since 2020, it's been a downhill ride for 2 damn years. Depending on where you got into the market, you're down 73%, maybe you're down 20%, maybe down 40%, 50%, whatever it is, we all have been suffering. So let's do some quick analysis on Alibaba stock, on Alibaba, what's happening in the Chinese market and what to expect for the next 2, 3, 5 years for Alibaba, because we already know we are deep in Alibaba. We still think it's an amazing company doing amazing things and can still prosper in the future in China. Before we get into this video, can you please like this video and subscribe to my channel? So the first thing I want to talk about was this Twitter post by Munger Investing, which was really eye-opening. Even though I knew this, it's good to always go back and kind of review what was been happening with Alibaba. So we know like Alibaba's return on invested capital, return on equity has always been like 14 to 16%, a little bit higher. But now we have to realize what Alibaba was doing and why it's been going down to 4 to 6%. It's because they were focusing on just growing the customers, making sure they're getting into lower tier cities, which doesn't generate as much revenue per customer. Now they're going to start focusing on actually generating revenue per customer, and that's what they're going to be doing. That's what they're going to be more on track of going forward. We are fully on track to deliver the target of 1 billion China AACs by the end of this fiscal year. Active annual customers, and Taobao Deals has been the major contributor to our new user acquisition. So remember, they're going to lower tier cities and getting these lower tier customers. They have just been focusing on growing, which actually giving out like vouchers to these kind of lower tier customers, cities, which kind of reduces the return on equity because they have to kind of help people or get people accustomed to this new product, Taobao Deals. So now they're starting to focus on more revenue per customer, which I don't know if we're going to see it in this next quarter because we have the earnings coming up Thursday. We're probably not going to see that huge growth in revenue because of zero COVID policy, but this is what I'm going to expect moving forward in the next 2 to 3 years. I'm not sure how fast that's going to come, but who knows? So that's like a good thing to remind yourself on, is that Alibaba is now going to focus more on actually generating more revenue per customer. But look at Alibaba, like we have to understand, like the balance sheet is so critical for our investment thesis right now because they have $77 billion in cash right now, right? And the market cap is $121 billion. So we can minus the $77 billion off the market cap, plus we're going to have to add back the $20 billion in long-term debt. So you get around $167 billion enterprise value for the actual business. So when you think about it like that, it's amazing because we have a cash flow around what? It's generating free cash flow at 20 billion, and that has been going down. And now that Alibaba is saying that they're going to focus on more on generating revenue per customer and getting more profitable, hopefully into the future, that's going to bring a lot of tailwinds into this cash flow yield, which is now going to be around 11% cash flow yield, which is amazing. And when freaking Warren Buffett was buying Apple in like 2016, 15, around that time, Apple's cash flow yield was at around 11%, 10%. So we're getting the same damn cash flow yield for the most dominant business in China, pretty much, Alibaba. So that's what we're looking for. And this is a growing business. It's not a dying business. That's what we have to remember. If they can kind of return back to kind of revenue that they're generating, maybe not the 52% to 28%, but still 10 to 15% once they get back on track, this will this will always still be an amazing business, and we don't have to worry about the price action right now because we are relying on Alibaba to generate these high returns moving 5 to 10 years moving forward. Now let's look at this actual Twitter post that I posted because I think it's really fundamental and very interesting to think about because I've been reading The Psychology of Money. It's a good book, but in it there has some really good quotes to kind of think of and kind of remind yourself on what's important in the market. So if you want to follow me, this is Just Invest Today. This is my Twitter portfolio. I don't really do much. I just kind of like watch what people are posting, watch what people are doing, kind of put my 2 cents into the market as well. The purpose of the margin of safety is to render the forecast unnecessary. Man, I already screwed up. It's supposed to be of. That's crazy. But that's how I feel about Alibaba. The balance sheet is so stable. You know they're going to keep generating income and keep prospering into the future. And we know we have Taobao, Tmall, we have Cloud. We just have solid businesses, so you don't have to forecast a lot of growth at these prices. So the margin of safety is so deep in Alibaba that you really don't have to forecast a lot of growth. So we can kind of be safe in buying Alibaba at these prices because there's not a lot of growth needed to actually get a good return, a 15 to 20% return. Unless you still think China is unsafe, you think about the delisting risk, you think about all of that, then yeah, Baba is not a good investment. But when you think about just a margin of safety in this bet and growing out the earnings, the future earnings, I think it's a very safe bet. So that's one tweet. The second tweet, historical odds of making money in the US. The markets are 50-50 over 1 day periods. So you have a 50% chance of making money in 1 day periods, 68% in 1 year periods, 88% in 10-year periods, and so far 100% in 20-year periods. Anything that keeps you in the game has a quantifiable advantage. So that's what we're looking for when we think about Alibaba. We have these huge advantages if we stay in the market when we know we have an amazing moat compounding company. The longer you stay in the market, the better your odds are of being successful in the market and actually generating a return. Think about it. If you just generated a 10 to 15% return on Alibaba, that's better than the market average of 68%. So you're even beating the market if you're averaging 10 to 15%. Are you saying Alibaba, if it's generating 50% return, can't double in the next 5 years? That doesn't even seem like a high bar. So 15% return is actually amazing when you think about the overall market. So there's still a lot of ways to go with Alibaba. We're still getting a lot of news out of Alibaba, man. Alibaba Baidu drop, as Sec says, significant issues remain to resolve the audit transparency. So we still see the Wall Street Journal, America, they're all playing games with this. They're still talking about delisting, but who cares at this point? We're going to move our shares to Hong Kong. So this is a non-issue still for me. This dropped the market down 7%. I still feel like this is going to get fixed in the grand scheme of things, but they're just playing political games, in my opinion. Take that or leave it. Maybe you don't think so. Maybe you think the delisting risk is too high. You can't invest in Alibaba. Next article, Alibaba Baidu rebound as China Premier Li says economic stability measures should move forward. So they're providing some kind of guidance to move the Chinese market forward, and they keep saying this. They keep putting money into the market, kind of just doing things to make the economic stability and telling tech that it's okay now, we kind of have the rules, we're not going to be as hard on you. So they're taking measures to actually provide more stability in the Chinese stock market, which is a really good thing and is very bullish for investors moving forward. So there's a lot of things to look for in this new earnings for Alibaba. I still feel like Alibaba, JD, Tencent, the main companies that I own, are still amazing. Guys, tell me what you think about this video. Please leave a like and subscribe to my channel, and I'll get back to you in the next video.